Hey, what's going on, guys? Bot Mentality here. Today I want to speak with you a little bit about the order book, as I think a lot of people underestimate the significance of it, and I want to talk a little bit about how I use it, how other people use it, and how you should too. So let's go ahead and jump into this. So the order book is essentially the same thing as level 2 in the stock market, but before we get to that, we need to start with the basics. So let's talk about level 1. So what is level 1? So this is essentially it right here. Level 1 is going to display the highest bid, which is the maximum price, a buyer is willing to pay for a certain security or coin. And the ask is the lowest price a seller is willing to sell it at. That's all the bid and ask means, buyer and seller. So here, this is an example of level 1. You have the highest bid at $9,837.26, and then 1 cent above that, which is the spread, sitting there at 27 cents. So this is level 1. So level 2 is here on GDAX. I went ahead and selected this area here. All of this is level 2. And what this shows you is the depth. This is the market depth. Level 2 displays the strength of demand and supply. So you're not going to see just one order, the highest bid and the lowest ask. You're actually going to see all of them within a specific price range. So in this example, what we see here are a ton of different orders. Now, one thing I want to say regarding the order book / level 2, in the order book, one of these lines may not be just one person. You could have multiple people stacked on top of each other at the same price, or it could just be one person. It just really just depends. So I wouldn't, look at this and think, okay, that's one person buying, 50 Bitcoin. It could be, but a lot of times it's multiple people stacked up, but it certainly could be. So what is the order book? This is just GDAX's version of level 2. It's really just the same thing. It displays the same information and you can utilize it the same way. I utilize this information the same way in the stock market. And so also we're going to talk about what is the spread. The spread, this bar here in the middle, is just going to show you the dollar amount between the lowest ask and the highest bid. Because, when the two orders meet each other, that's when the trade executes and it moves over into the trade history. And so you can go look through the trade history and see what trades actually took place at which price. This is showing you the trades before they occur. And it also kind of as they're occurring, you'll see some of the size, get reduced. And if you look over on trade history, you'll see it printing there. So this in a way is sort of an indicator towards the future, whereas the trade history kind of shows you what happened just then. This is showing you where the price is most likely to move in the short term. Again, it's something I use for short-term trading. And you can also use it for entries, but I'll get into that a little bit later. So yeah, what we're going to jump into now is the buy and sell wall. What is a buy and sell wall? So what you're going to see here is the first number is going to be the size of the order, or orders plural. Like I said, people can be stacked up on top of each other here. You're going to see the size. So here we have 13 Bitcoin sitting here at $9,797.12. Now this is going to change if the buyers, if the sellers come down to meet the buyers, or if they remove the order, or if they go ahead and move up to meet the sellers and hit them at their asking price. See, it always changes. See, we just had the buyers knock down a little bit in price because the sellers came down to meet them. So that's it. So what is a buy or sell wall? Well, a sell wall is essentially going to be what we see right here of 33 Bitcoin on the ask. What that means is a ton of people or one person essentially are stacking their sell orders here and created a sell wall. So in order for the price to move up past this number, the buyers are going to have to either eat through the entire wall to move up to the next price level at this 3 Bitcoin area, or the sellers are going to have to pull their order and then the buyers can move up that way. So what this looks like is the price is about to go down. And we'll see what happens here in a few seconds. And the reason why I say that, just, look at the size here. And this bar is just a representation of the size of the order compared to the rest. So you can just kind of look at that and kind of gauge, okay, well, the red bar is bigger than the green bar, so the price is probably going to go down. It's just a quick way to do it. But that's what I would see here. And so that's kind of what buy, this same thing can happen here. We can have buy walls. There's a little bit one here for Bitcoin down at the 785, but really, there's a huge sell wall there. And that's a good example of what a buy wall or a sell wall is. And let's talk a little bit about how price can be manipulated while we wait to see here which direction this goes. And see, there we go. We went straight down. We went from the 797 down to the 793. And now all those people who didn't get filled to the 797 are stacking up here at the 792. So does that kind of make sense? You can kind of see how that right there, if you were trading massive size, you could have, got filled at that point, and then let's say in a short, and then bought to cover your position on the bid now, and you could have scalped that, spread for a profit if you had huge size. Now let's talk a little bit about how this is manipulated. So because this is so short term, and if you're watching the order book, chances are you're about to place a trade or you're looking to exit a trade. That's what people use this for, to judge the short-term momentum in the market. So, for example, you can list an order and then take it back without it being filled, without letting it, go through. So let's say I flashed, a 30 Bitcoin order like we just saw at 797. If I put that up, it doesn't even have to get filled and the price can move down, because what will happen is the people who are holding and they're looking to sell, they're going to see that, let's say 20, 30 Bitcoin order that I put up. And so chances are, they're like, oh man, the price is about to move down. Let me go ahead and get out while I still can. So they'll probably market sell their position to go ahead and get out, even though that huge order didn't fill any yet. They know there's a greater chance of the price moving down in the short term versus up in the short term. So they're going to go ahead and market their position and go ahead and instantly sell as fast as they can. So what can happen is, let's say, for example, I'm looking to enter a position. So if I wanted to get long, what I could do was, and I already have some Bitcoin currently, I could list a sell order for, let's say, 30 Bitcoin, right? And people are going to see that and be like, okay, the price is about to go down. Let me go ahead and get out. Or they're going to enter short positions below me. So they market sell at that price. And what I can do is just set buy orders at the highest price on the bid. And essentially, when they sell, I can buy into that and then pull my sell order. So I pull the 20, 30 Bitcoin sell order that I had sitting there. And now the buyers think, oh, they pulled the order, we're going up. So people are going to buy in after me. And I already filled into the people who were selling because they saw my order sitting out there. I hope that makes sense, but that can work the same way, vice versa, in a different situation. If there's a huge order on the buy and I want people to buy in ahead of me, meanwhile, I have a sell order and I'm just selling into them. You see what I'm saying? So that's kind of how people can manipulate the market in the short term. And you'll see a lot of that if you sit here and watch the order book on GDAX. Now, other exchanges have, essentially the same thing. They might call it a little something different, but it's all just the same thing. You can utilize it the same way. High frequency traders often will manipulate the level 2 or the order book, and they make a lot of money doing that, for sure. Now, another point I want to make is hidden orders. There's certain orders on certain exchanges, like I believe Bitfinex does it and a few others, where you can actually mask your trade size. So what that means is I can put an order, say, anywhere up here on the ask to sell, but not have it appear in the order book. So I can have an order at, right here at the, say the lowest price at 9,791, and I get 14 cents, but have it not show up. So people will be buying. It'll show up on the trade history on the right side of the page. It'll show that it went through, but the price won't move up because I'm sitting there selling into people with an invisible order. That's another thing you have to look out for. If you see a lot of size going through in the trade history, but the price isn't moving up and the size isn't decreasing on the order book. It could be because there's someone right below that selling into you, and they're using a hidden order. And that's very common in the stock market. You could do that on just about any exchange, mask your size. And people want to do that so they don't manipulate the market. If they're trying to exit a position with, let's say, 100 Bitcoin, they don't want people seeing 100 Bitcoin order just sitting here on the ask, then scaring everybody and everyone sells and they can't get filled. So that's why people would use hidden orders. Or if they want to enter a position, they don't want people to know they're entering and push the price up if you're going for a long. So let's talk a little bit about how I use this in my trading. So what I'm looking for is, because I'm a short-term trader, it's very important for me to get a good entry at the right time and avoid taking liquidity, which essentially means I'm using market orders, or I'm meeting the ask upwards or meeting the bid going downwards forcefully. So what that means is I'm not setting a limit order up here. I'm putting it right on what the price is currently at, and I'm just going to go ahead and take liquidity, which is removing the highest bid or the lowest ask at the price they're asking. So what I prefer to do is set a limit order, because as you know, on GDAX, you don't have to pay fees if you use limit orders. It's completely free, which is very great, especially if you're scalping, looking for day-to-day profits, because you don't have to worry about that. Meanwhile, in the stock market, you're paying $5-10 a trade or entry and exit. So sometimes it can be $10-20 round trip. And if you're scalping, that eats away a good bit of your profits over a month, or if you look at a year, total commissions paid. So what I'm looking to do and how I use this in my strategy is, for example, if I want to enter a long, I want to list my order to buy when the ask is stacked. So I want to see large size here in the order book on the ask, on the sellers, so that there's a high percent chance the price is going to move down to hit my order. And of course, I'm going to place my order just above support. So that way, say if the price is at, let's just say 9,000, and or the price is at, let's say 9,100, and I'm looking to get long to buy over 9,000 because I think 9,000 will hold. I'm looking to put an order down here, let's say at $9,015, $9,025, and I'm expecting the price to come down. And so I'll enter my long order. If it's not there already, when I see the sellers start to stack up here, I'm like, okay, so momentum's probably going to change. We're probably going to head down. They'll probably hit my order. So let me go ahead and put in a long here, and I'll go ahead and get filled. That way I add liquidity and I don't have to pay any fees. So same thing goes vice versa. If you're looking to sell, you can wait, excuse me, you can wait for the bid to stack up like this. See right here at the 19 Bitcoin, I would look to put my order in here in order to sell, if I'm looking to exit a position so the price can move up to me and I can exit my position. Because chances are with the 19 Bitcoin here and 16 there, their price will move up for the short term, unless of course they pull their orders. So it's not 100% accurate. You can't just look at this and say the price is going up, buy, because that may not be the case. They could pull the order, or the seller, the ask could refresh. All right, I'm at 11 minutes here. Taking a little bit of time, a little bit more time than I wanted to explain this, but I really hope this helps make sense. If you have any questions, leave a comment down below. I'm really just here to help you guys with this. And so that's how I use it in my trading. I'm looking to make short-term entries by assessing the bid and the ask. It's very important to utilize this. I wish more people would. It tells you a lot about the momentum of the market. How strong are we going? Is the bid, excuse me, as soon as it feels, is the bid just refreshing and more people putting buys and buys and buys, or moving up very quickly? Or is the ask, refreshing like here? It went all the way down to 6, back up to 20, down to 14, back up to 20. Are there more people looking to get out and with some size here? So this really helps with short-term entries and exits. And again, it's easy. It makes it easier to add liquidity if you know which way the direction the price is going. Instead of just marketing out and paying that fee, go ahead and add liquidity either way. And even if you're like, okay, I want to get out right now, chances are if you come here and look at the order book, you can figure out which way the price is going to go. So that's really it for this video, guys. I hope this really helped. It's just one of the topics I thought I could get out there to you. If you have any questions, leave the comment below. Again, this is Bot Mentality. Remember, trade like a machine.